What banks look for to approve loans? Thanks for my EBITDA segue. Before we get to there, there's a few things. Credit score. So 2008, 2009 wasn't as long as people think it was. Some of you may still possibly be suffering from some of those, as I know some of my business clients are. A company that I strongly suggest is Lexington Law. If you do need some credit repair, they kick butt at actually doing what they say they're going to do, and they will really help you get your credit cleaned up. Everyone's heard the cool commercials, freecreditreport.com. Okay? Well, first of all, if they're advertising, they're probably not free, because how are they going to pay for the advertising, right? Okay? Annual credit report is the only free one because you've probably never heard of it, because that means it's free. It doesn't actually ask for your credit card number. You can do it once per year, and you will be able to see exactly what's on all 3 credit bureaus. It does not affect your credit score as long as you do it once per year. So stick it on your calendar and do it every single year. Strongly recommend if you haven't done it. Credit score is, of course, believe it or not, you can get as low as 300 on a credit score. That's not even getting your name right on the credit score. And then, of course, banks generally, we're looking for great credit, 730 or higher, and really good most banks can work with as well. So we talk about personal credit, but there's a little thing called business credit too that kind of hovers out there. So having business credit is important, kinda. Because, first of all, not all banks report to business credit bureaus. So if they don't. Business credit cards are really one of the only things that actually does. However, your vendors do. So a bank is actually going to pull the business credit report just to see how you're paying the vendors. It's not going to tell us anything about any sort of business loans you may have. Okay? So the bottom line is don't focus on business credit. Really focus on good personal credit, because that's going to be the most important piece. Do not pay for Dun & Bradstreet or any sort of those types of things. Those are made for larger corporations. And if you're truly looking to prepare yourself for business loans, again, it all goes back to your personal credit. It has nothing to do with these, because I'm sure you guys get calls from them all the time. Why do you think they're calling you? So they can get your $29.99 a month. Okay? Cash flow, again, very important. Why do you think I have a dressed up guy with boxing gloves when I'm talking about tax returns? Oh, there's a fight. That's right. And you know what it is? It's between the banker and your CPA. Because you don't want to pay any taxes, and I want to make sure you're rich. So what do you think happens every year? It's a freaking battle every single year. So this is where a good banker and a good CPA will get together and strategize if you're going to be making a big purchase for the year. Maybe you're going to buy a building. Maybe you're going to buy a bunch of equipment. Whatever the case is, strategize. And that's the big thing when it comes to that with your CPA. So definitely let us know what's going on. As we talk about, there are sometimes things that we can add back on your taxes. No, if you went to El Gaucho for dinner every single night, I cannot add that back when looking at a loan. But just we talked about EBITDA. Sounds like something from the movie E.T., right? EBITDA. So again, we talked about a 4 earnings, 4 interest, taxes, depreciation, amortization, but here's the bottom line. This is why you should care, okay? Oh, sorry. I'm just kidding. I skipped one thing. Also, some banks can add back those one-time expenses. You had a large issue one year. Maybe you had employee theft, okay? That sucks, and we're going to want to know the story. But it's something sometimes we can work with you because clearly you didn't plan on that, okay? So cash flow example, this is about as mathy as I'm going to get, I promise. But I think it's important for business owners to know, okay? Everyone has a P&L. Everyone looks probably at your top line and then your bottom line, right? So let's pretend your bottom line is $10,000. Some of you may be happy with that. This is how a bank is going to look at your taxes in your world. That $10,000, we can add back any sort of interest expense that maybe you paid for that year, whether that's from anything, okay? We can add back taxes. We can add back any sort of depreciation. And sometimes if you have amortization, we can add that back, ask your CPA on what that, most people actually don't have that. And again, like I said, a good banker can actually add back, maybe you had to redo something on your HVAC system or something like that, and we can add that back to your cash flow. So instead of now 10,000 as your bottom line, 23.2, well that looks better. The bank's doing something for you, there's a shock, right? So that 23.2 means that you have this money here in this hand available to pay debt, okay? So what, say for example, if you're a business and you have $1,000 in monthly debt payments, maybe that's a car loan, maybe that's equipment, whatever the case is. You times that by 12, and that's your annual debt payments. And you divide it by the 23.2 and you get a percentage of 1.93. To you, what does that mean? It's a number. To a bank, that's a big deal. That's 80% of our underwriting, okay? That means you can afford these payments 1.93 times. Banks look for 1.25 or better. So would I lend money to this business? Yes, as long as they can fit to that 1.25. I'll pause as you're taking a picture. Another thing that you can do too is on a lot of your accounting softwares, you can actually put EBITDA on your P&L. Some can, some can't. Check with your CPA or accountant, but I think that's a very important thing to have. This happens all the time. Here's the number one Paul pet peeve. Never go to a bank and say, how much can you give me? I will close up a binder so fast if I hear that and you're done. Because you have no plan. Well, what do you want to give me? No, what do you need? We're just not going to just give you money. We're not a nonprofit. Or, well, I don't want to put any money down. Thanks. There's the door. We need to see shirt in the game. Okay, very important on there. And it all depends on what you're trying to buy. If you want to go out and buy a personal car, you can go to a car dealership and get it with no cash down. Good, go do that. That's not a problem. But for your business, it's a different world, okay? Generally speaking, for an auto, you're looking for 10 to 20% down. And this is normal banking. Real estate, 10 to 25% down. Any sort of equipment is also at about 20 to 25% down. If you want less than that, then you're going to be looking towards Guido, and he can help you. This is general banking standards. Am I right, bankers? Collateral. Now that's a sexy building. Max, my underwriter back here, by the way, probably thinks I've financed that before. Does the bank want what you're giving, or do you have anything to give as collateral? Most banks are collateral lenders. They want to make sure that you have collateral and you have cash flow. If you have both of those, you can probably walk away with funding, okay? If you want a line of credit, do you have accounts receivable? Accounts receivable, do you have somebody who's already got a contract to pay you? Do you have hard assets, a vehicle, real estate, something to give to us? Unsecured loans are tough.
So when you do one of those, I don't know what they call it, banking, the personal, you sign it just with your name type thing, is it then your credit that you're using as collateral?
If you just sign your name for a loan, and it's a business loan, those are very rare. If you found one, good for you. But generally speaking, it's against your personal credit, if you're ever able to find those.